The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the start of the week. This is one of the most historical weeks in the history of the stock market, folks. Back on August the 25th, 1987, we had 5 planets in conjunction in the sign of Leo, and that was the top of the stock market for the next several years, led to the crash of October of 1987 on the 19th. The market's set up to do something like that, but the $64 question is when. I'm going to be doing a webinar here this Friday. Let's try it again on the 24th, which is Wednesday. Wednesday will be the webinar. And what I'm doing is I'm going to go over some of the stuff that I learned over the years and how I learned it. The first picture I've shown is the big 4x4 oil painting that I have in my office, showing the patterns and the rules that I've used over the past 40 years. But what I'm going to try to do is to go into some of the background material that where these patterns came from and how they developed from the 1920s, 30s, and 40s and stuff. But this is from the Gartley book, and it shows the references that he had in here. And I went through each one of these. Fortunately, I was good friends with Don Mack at the Investment Center bookstore, and he had all these books, so I could go through them one at a time. And there's some famous names in here. Of course, you can see W.D. Gann and Schaubacher, and some of the others that are also in D.C. Rose and Duran. But they all had some really good information. What I try to do is to learn a little bit about each of it, or some of it. So that's the main thing. Let's get to the markets. We have a very interesting set of markets today. As we came in last night, I wanted to start out here with the German DAX because that's always a real interesting to look at. This is where we were coming into Monday the 22nd. We hadn't quite opened yet. This was the close that we had on Friday night. We closed right at the 78% retracement of the high from the 19th, and then also a 50% retracement from the high on the 18th. I'm just going to walk you through this because if you think that this thing is very, very docile, you're looking at the wrong thing. This is the casino of commodity futures, folks. This is not for the faint of heart. The next thing you're going to see is what happened in this after. You can see the opening there where we were up at the 7-8% retracement and 50% retracement. Then it opened sharply lower. Then it rallied, and then it broke all the way down to the 78% retracement level. Folks, this thing is $2,500 a point. So when it moves from 2560 down to 10,000, let's try it again, from 10,560 to 10,500, that's 600 points. At $25 a pop, you're talking $1,500. We haven't seen a 30-point move in the S&P since Hector was a pup, and that was a long time ago. And then you see after it hit the 78% retracement, it shot up and went all the way up, taking out the highs of the last several days. And then, of course, you'll never guess what happened after that. It has hardly any volatility here in the DAX because when you see it the next time, you're going to realize that this is not for the faint of heart. After we made that new high, we went from 10,660 down to 10,385. That's a $6,000 move, boys and girls. That's a big move. That's 140 pips, 140 points. Let me see, 120 points in the S&P 500. So keep in mind that this is not for the faint of heart. It has a very large margin involved with it of 20,000 euros. But it is certainly tradable, and it has some really good, patterns that lined up. We've got a couple others that are looking a little bit interesting this morning, or well, through last night anyway, because we hit some points. Whether they're going to be, very much of a factor on a long-term basis or not, I'm not quite sure. But if we take a look here of what we did in silver last night, because it's very important, we hit a really important spot here in the silver, and you'll see here that it came in right at the 61% retracement of the last major low, which we had at the Brexit area. I think I mentioned that we're going to have Shane Smulyan on at the break, wolftrader.net. If I didn't, I want to remind everybody to stay tuned, because that's always a really interesting show. He's got some great information, and he's been talking about this high level coming in here now for the last 5 or 6 days, and since the market's really gone nowhere, it looks like it is poised, to get ready to have a pretty significant move, and no one's expecting anything dramatic. That usually means there's going to be something dramatic. Now, the next chart that means something, I believe, is the gold chart. We're going to take a look at this one right now. We're going to see here that you'll notice that I have the Gartley pattern measuring down here to the 1326 level. Now, last night we got down, I posted this last night, around 2 in the morning, I believe. And basically what we're looking at here is we hit that 61% retracement again at the 1338 level. We've rallied about, $3 to $4 or $5 off on the gold market. We've rallied about 15 or 20 cents in the silver, but there's still a possibility that we can break down from these levels. This is the key thing that we want to keep an eye on, because these markets, they line up to these points pretty well. And remember, they're only probabilities; they're never certainties. So don't ever allow yourself to be tied up to that. One of the questions that we're trying to answer today is what's going to happen in Jackson Hole, Wyoming. That's, the big vacation area up there where the Federal Reserve folks and the central bankers are meeting, and you'll be interesting to see that. I have a great Jackson Hole, Wyoming joke. My nephew, Larry, who's named after me, who was a All-American football player at Indiana, was vacationing with his girlfriend in Jackson Hole, Wyoming, and it was a very lovely home and everything, and it was snowing like crazy, as a matter in the wintertime, and he was out helping these 2 kids that live next door build a snowman. And Larry's about 6'5", and he's just solid muscle. And he was out there helping these young kids, about 8 or 9 years old, build this snowman. And the mother came out, and she was checking on to see who this guy was. They knew he was from next door, but they had not seen him before. So she introduced herself, and he came into the house, and he said to the people, he said, boy, he said, that lady looked really familiar. Who was she? And he said, that was Bruce Willis's ex-wife, Demi Moore. And I said, oh, well, that's interesting, he said. So he went down to the clubhouse, and he was working out with weights, and in came Arnold Schwarzenegger and Bruce Willis. They were there working out also. And so he really got to, chat with them a little bit, but it was really unbelievable, that area. But anyway, Wyoming is really beautiful. The problem with Wyoming is the fact that it's where we have the Yellowstone Park, which is really, really dangerous. Anyway, 877-927-6648. I'll quit bluffing. I'll be back with something interesting.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming, see high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we'll have Shane Smolian of wolftrader.net on in about 10 minutes. I wanted to go over the crude oil complex because I focused that in the newsletter this weekend, that we had some really serious areas of resistance facing us as we came in this week. The first one, as you can see here, is the gasoline futures. We're at a perfect 61% retracement on the daily chart, and that is a pretty important number that we always look at. Now, if we take a look at the crude oil itself, you'll see that we're almost exactly at the 78% retracement as of Friday. That came in right at 48.96. I believe the high was right at 48.92. So that was pretty much spot on. And then again, if we take a look quickly here at the heating oil, you'll notice here that you're going to be watching a situation where we're right at the 78% retracement as of the close. And actually, it was down on the day Friday, which was unusual. I've had a request here to do the natural gas, and what I will do is I will post a natural gas contract in the room when we have the break right before we get Shane on the line. But until that time, I'm not able to do that. There was someone else asked a question about some of the things that I'm going to be covering, in the webinar on Wednesday at 5 o'clock Eastern time for TFNN. Is I'm going to cover, what happens when things go wrong. And I wanted to talk about trading failed patterns and some of the things that you want to look at, both on the long and the short side, on how to try to, to learn, to reverse yourself, which is not the easiest thing in the world to do, to say the least. But we're going to go over some of these things on why they're very important. And one of the things that you can do, of course, is using candlesticks, because they help with distribution and accumulation, which also can be important. But basically the seminar is how I came through all these different books, and what I pulled out of these old masters books, which I think are the best. And of course, I had a lot of help along the way with my mentor, John Hill from Futures Truth, along with several other of my mentors that I had through the years, Dave Nelson, Oscar McClure, Roy Fassel. I mean, some of these guys, helped me a great deal. But remember, this was back in the 60s and 70s. We didn't have the NFA until sometime in the 70s. CFTC came in 1975, and the NFA was around 1982 or 83, as I recall. So we haven't had regulation here except for the last 30 or 40 years. We probably should have had it before then, but the business operates pretty well. So I guess we're going to be being okay. But anyway, that's what we'll be watching or learning, hopefully, on Wednesday, to learn some of these things and give some trade ideas too. There's a couple of good trade ideas that look really interesting. Now, watch this dollar index, folks, because this is the one that is really going to be, showing what's happening, in the market, because we've had this dollar index, make its low, and it's had a pretty good rally. That means the euro came off about 100 and some pips, and they're all rallying, just back to about even, on the day in some of these. So the dollar is still looking very, very bullish. The key market, I believe, that will be one of the things that make the market really move will be the Treasury bond market. We came down and we hit some really serious three-drive pattern down at that 170. We've already rallied 2 points today in the bond. So that's really what we have. Oh, we got a caller, one of our friends from New Hampshire. Lou, is that you?
That's me, Larry.
What can I do for you, my friend?
I was thinking if it's not too late to buy puts in the GLD or GDX.
Oh boy, I'll tell you what. I am probably the last person to be a buyer of puts and calls. If you want to do really well in that market, Lou, you've got to learn to be a seller, because you have the odds in your favor. Option sellers, win about 85% of the time. Option buyers win about 15% of the time, so it's really difficult to do that in here. I can't do that there for this reason, Lou. We're in the middle of a trading range. If we were up around that 1370 level, I would have said, yeah, you could probably do it there. If we were down around 1202, but there's no big pattern in here. We've been in a trading range for well over 3.5 weeks, and so I don't see any reason to put any position on there at all. Wait till you get an extreme before you either buy a call or buy a put. In order to be a put buyer or a call buyer, you have to be at a major extreme, and we're not there now. We're right in the middle. So you diddle in the middle, you'll end up having mud on your face. So I would stand aside.
Okay, that sounds great. Thanks for the advice, Larry.
No, sometimes standing aside is one of your best positions, Lou. Try to remember that.
Yeah, I will. Thank you.
You bet. As a matter of fact, that was Lou from Nashua, New Hampshire. But one of the things that Jesse Livermore said in his book, The Reminiscences of a Stock Operator, that was written by Edmund Lefevre, which I believe was the pen name that Livermore used, that having no position was actually a position, because you were having the patience to wait, for the best possible time to enter. So just because you don't have a position on, that's actually a good position. When in doubt, stay out. That's the number one rule that is on my painting that I posted when this whole show started this morning, and that is a very, very important thing to remember. I'll put that up here so that you want to remember that that's what you want to do. So we'll watch that as we go through. We'll have Shane on here in about 6 or 7 minutes. The next market that I wanted to talk about is get back to the stock market in here, because it's really done nothing, folks. But we're looking at something really dramatic getting ready to happen. I don't know what's going to do it, but if you look at this VIX index, we're lower than we were back in 2008. And, we have a whole lot of things going on here with, student loans, quantitative easing, credit default swaps. All of these things are coming in. There's absolutely no fear in the market. And this is the one that if you had to, put a couple of bucks on it, I would say to buy the VIX index and put your seatbelt on and, be willing to risk 2 or 3 points, because if it's right, it could have a 30-point move easily, which would be nothing more than a 60% or 61% rally back off the high from just last year. I mean, so this is, really amazing. Remember, the high on this VIX is, we're trading at 11 now, and the high on this back in 2008 was at 96. So it's off quite a bit. But this is another way of looking at these same patterns that we're seeing in the stock market that gives a really interesting picture. And if we look at, of course, the New York Stock Exchange Index, which is our favorite, you'll see here that we are still hovering right near the 78% retracement. Over the past month, all we've been able to do is make a marginal 1.27 higher high than we did on July the 3rd. So the market is certainly not exploding to the upside. If you want to see that same pattern, if you'll just go to point A, which was back on May 19th of 2015, we did the same thing. We made a slightly marginal high before we dropped 25%. So 877-927-6648. Stay tuned for Shane Smolian, wolftrader.net.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have one of our favorite guests on, Shane Smolian of wolftrader.net. Shane, are you there?
Good morning, Larry. Can you hear me?
Just like you were sitting right next to me, my friend. I've got your first chart posted up here about the Olympics. I'm really interested to hear about what this is. So why don't you fire away and tell us what you're seeing?
Yeah, so this was an interesting month because we talked about this month as being a critical month all year, as being a very negative month, and it was in terms of the cycles and the astrology. It was very negative, but there was one problem this month that I saw, which was that the Olympics was smack dab in the middle of August, and I was a little concerned about that because that tends to be an extremely positive seasonal. It's like its own unique event. And so I had posted this in the newsletter. These are the changes of the Dow Jones during the Olympics from 1948 through 2012. And in general, it's a very bullish period. It's very hard to find a declining market during the Olympics. So that did turn out to be a positive seasonal, and that is ending right now. So it was just a curious thing that I posted. It's just something that kind of popped into my mind. I said, "Wow, this is really odd. This is something unique in this month." And so the market did hold up through the Olympics.
So Shane, could that be possibly also related to that 4-year presidential cycle that we've heard about?
It very well could be. Those are two bullish factors that we're looking at right now. The presidential cycle is a bullish thing in general. I mean, 2008 was an exception, but that's generally a bullish time. And then this is another little sub-cycle that came in that was bullish. And I'll talk a little bit towards the end about the Fed, how they have their own annual cycle that I've developed here.
Okay, now the next cycle we're looking at is about the Fed juice. Did you want to go over that one?
Sure. Is this the one the long-term view?
Yes, this is the long-term 2012, 2016.
Yeah. So, okay, you can see on the left-hand side of the screen, this is the Fed juice. So this is a basically a representation of the data that we receive from the Fed on various fronts. I mean, this is like 4 or 5 different categories that we take into effect here. And you can see on the left the QE3 peaks. That was the peak of the juice that was flowing into the market. And once QE ended in that green box, you can see that it tapered off. But recently, they've basically broken their rules and started this new, I don't know what they're doing. They're just juicing the market to extreme values here. And so we're up to levels of quantitative easing now. And that's kind of interesting because it's making the market appear as if it's ready to break out. So a lot of people who are, let's say, Elliott wave counters view this as a primary 3-wave breakout. But I got to tell you, look at this chart and then ask yourself the question, is that really a breakout, or is this the Fed pushing the market to make it look like a breakout?
Well, that's been going on for 6 years now, and
since 2009, that's correct.
I know. Yep. That's been a tremendous thing, and you've done a great job of alerting us to this Fed juice. Now, when you refer to Fed juice, you're talking about how they come in with their quantitative easing and buy the bonds and that kind of and notes and things like that. Correct?
Yeah. Okay. So it's a
money
combination.
Into the...
Yeah, it's a combination of many things that we track here, and they put this data out. It's a combination of their purchasing mortgage-backed securities, purchasing treasuries, the sales, the agency securities, the lending. All of these things come into play, and it creates a net balance of where the money is going. I do want to point out just how absurd these levels are right now that we're at. So this is one of the reasons why the market is having trouble going down. Even though it's pulling off these highs, it's having trouble going down. Now, they've changed from in quantitative easing, the primary focus, I'm going to point this out to people, is buying treasuries. They have basically supplanted that with purchasing mortgage-backed securities. And so it's almost like they're playing a semantic game. They're basically doing quantitative easing right now. It's just they're buying mortgage-backs. One important thing that I want to point out to people is for the first time in a few years, they started purchasing treasuries. It was like a week ago. And it was $400 billion. It wasn't that much. $400 million. It wasn't that much. But that's something that they do during regular quantitative easing. So we need to watch what the Fed is doing because now they're purchasing treasuries again, which is that's a change in their behavior.
Now, we had a question from one of our listeners is, where do you get this information? You're the only person that we know. I know you keep that in your newsletter and stuff, but where do you get the information? I guess it's public information, correct?
It's public information that we take and we gather it and we sift through it, and we take all of the Fed's information. It's available on their website, the New York Fed, and we take their information and we distill it, we put it into an indicator here, we're able to plot it against the market. So I can't go into the exact details of how we calculate it, but I can tell you that this is purely from the Federal Reserve. This is their data it's public data that they provide. It's just we filtered it into an indicator.
They probably put so much data out, most people don't even look at most of it, I would imagine.
Yeah, and it's tough. It's tough. You know, people, it's hard to even gauge when you're talking about billions or trillions. In people's minds, it just kind of all blurs together until you see it on a chart to understand what they're doing. It's really difficult to see.
Okay, the next chart we're going to talk about, and we're going to have a break here in about 2 minutes. We'll probably have to spend a little bit more time. This happens to be one of my favorite subjects, as you know, because you've been working on this for quite some time and done a great job at it. This is related to the S&P and the speed of Mercury. This was work that was done by oh gosh, I forgot his name. George Baer.
Actually, okay, can we go back to the one that says 2008 to present, though, the Fed juice? Is there any way we can go past
Oh, sure, yeah. Am I technically challenged on this? Are you kidding me? Boy, you're asking the right guy. I know how to click. Hold on a second. There you go.
Sure. No, it's just we're still on the Fed juice. I want to talk about this, too. The S&P is priced in terms of dollars. So what I did was, and this is to point out what's happening, I priced the S&P in terms of the Fed juice. Why did I do this? Because this is going to tell us what I believe the fair value of the S&P is. And so you can see on the left-hand side, once the QE started and all of this shenanigans started, the original price was about 85 on the SPY. And what you can see is this oscillates right around that price, and if you go over to the right hand side, in 2015, right around May, it started falling. And so right now it's at about 85. So I believe that's what the fair value of the SPY is. The S&P, the fair value, I believe, is about 850. And that's one thing. And I think it'll go there. I just, the question.
You said 850, right?
850. That's the fair value. If you price this, if you go over to the left, the last time that before they started all this nonsense, that's what the price was. Now you see this downsloping chart here on the right-hand side. What's basically happening here is that they're having to feed more and more money into the market just to keep it afloat, and that's why this price is dropping. So we need to understand that what they're doing right now is unprecedented, and that's why this market is holding up. It has nothing to do with the market being strong, fundamentals, absolutely nothing. This is 100%, 1,000% the Federal Reserve manipulating this, and this is the data to show it. And so it shows you that the fact that they're pumping all this money in and that they're having to do more and more and more, and eventually won't be able to do it.
Okay, stay with us. We'll be right back with Shane Smolian of WolfTrader.net after this break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we've got Shane Smolian of wolftrader.net. And Shane, I think we're going to be on to the speed of Mercury chart now.
Yes, absolutely.
Okay, she's ready to go.
All right, so this is not the planetary speed index, but this is the speed of Mercury. And Mercury is, as you know, is one of the most important planets to look at when we talk about the speed because it's so close. So the planetary speed index, typically the market does mimic this speed index. Now it's been holding up through August, even though August is cyclically a bad month, but it should be heading down. Now the interesting thing was I talked about this in the newsletter. I said the worst part of the month is towards the end of the month. So we're coming into that now, and we have a slew of dates here. We have from the 19th to the 25th. The 19th, the Bradley tops. We have the 21st here. That we're having this change of the Olympics is ending, and then the 24th, 25th, you can see as this chart declines here, we're moving into the traditional crash zone of the Mercury retrograde cycle. So Mercury makes a station right there towards the end of August, and on either side of that, that's when the market is most prone to crashing. So we're coming into that period now.
Mm-hmm. So if someone wanted to really take a long shot, they would be looking at a September put that would probably expire around the third week of September.
Well, let me tell you, here's the only problem here, and I'm going to get into this. We're running out of time for this market to decline, and because we're coming into some positive seasonals here. So if the market's going to decline, if it's going to crash, it's going to be more of a flash crash type of scenario, and it will have to start happening between now and I would say September the 12th at the latest. That's your window right there of the crash. Mm-hmm. That is the window of a decline that would give you I think the highest chance of a decline in the market based off these planetary indexes.
Mm-hmm. Okay, now we have a big anniversary date. You know, this was before you were trading, but August the 25th of 1987, you know, was a really big high in the market that led to the October, 19th crash, which was in fact a flash crash. I mean, they didn't look at it that way. I mean, I certainly didn't, but it was over a period of about 8 days, and it was the best buying opportunity since 1982. So maybe that'll be the same thing this time. Who knows?
It's possible. I mean, it's very difficult to tell since these markets are so scrambled and everything is so manipulated that with the Fed in there, it's very difficult to gauge this. And I think once that move happens, it's going to be difficult to get on because I think it's going to happen so fast that people aren't going to be able to catch it if they're not ahead of the curve.
Now, you mentioned about it is difficult, and if you stop and think about some of these hedge funds that are, losing subscribers and they're underperforming by a great deal, along with the indices themselves are, actually lagging other than the New York Stock Exchange Index. This could be the fact that people are just getting disillusioned of what's really happening, and that might be the reason. I don't know.
It's possible. I mean, I will say that this is the best chance of a decline that we have right now. But after September 12th, if this thing is not going down, there's a good chance that this is going to continue to rally higher. And I'm going to tell people that right now. It has to start happening now. So if this does not start now, then the chances of a rally after that 12th period are much higher.
Okay. We have a question from one of our listeners about the high frequency trading. Do you think that has some type of objective of this? I mean, causing some problems or not? Because that's what makes the volume so big sometimes.
Yeah, I think it gets more into, you get into these chaotic systems that become very unpredictable, and I think when what happens is you get into these positive feedback loops. And so a positive feedback loop is anything that, when something happens, it accelerates it instead of slows it down. So I think that a lot of these programs, what happens with these high frequency trades is when something goes wrong, it goes really wrong. And so that's the problem with it. And so that's why we're more susceptible to a flash crash scenario. I think that definitely increases the chances of it, for sure.
That makes very good sense. Now, we have the final chart that you sent us today, and that is looks like a cyclical chart of quantitative easing. Do you want to run through us what this looks like?
Yeah, this is actually a little preview of next month's newsletter. And the newsletter, I'm actually breaking it up now because it's become so big into a newsletter, which is basically astrology, and then we're going to have a cycles edition and then a Federal Reserve edition. So this would be from the Fed. I ran a solar cycle on the Fed juice, and this is really shocking to me. It's so predictable what they do. There's actually dates that they run the Fed juice up, and they run it up into the beginning of each quarter. It's a very systematic, deliberate thing that happens. So this is one of the reasons why I'm telling you about the September date. If you look over on the one that says Q3, Q4 peak on the right-hand side, that is this quarter coming up on October the 1st. So that bottom, the run-up period, starts right around the 12th of September. So right around the 12th of September is where they start their annual ramping of the juice. So this is important, guys, because the Fed has created their own seasonals now. So in addition to the seasonals that you have, like holiday seasonals and Santa Claus rally and, Ides of March and Sell in May, all this stuff, now we have the Fed seasonals. And so by September the 12th, if this market is not declining, I'm telling you, the Fed always comes in and starts ramping up the juice even more than they normally do. So we're at historic levels now. I don't know what that means. It's hard for me to gauge because we're so high. But based upon the past and based upon the reliability of this cycle, that by September the 12th, if this market's not going down, there's a very high chance that the Fed will come in and juice even more, and this thing will rally past to new highs. And it doesn't look like it. I know it looks crazy. You look at these charts and you're like, how in the world can this thing keep going higher? But I'm telling you, if it doesn't decline now, after September the 12th, there's a good chance it's going to rally right into that election.
I agree, and I always remember one of my mentors told me there's only one person that gets the absolute high and one person that gets the absolute low, so don't be concerned about those particular levels. What the question that someone's mentioned is what would cause the Fed, or what would they be able to do in order to keep pumping? They've already put $4 trillion into this over the past 5 years, they mentioned, so I don't know. Could they put $8 trillion? I guess they could. It's only paper.
Yeah, I mean that's the big question. When you look at these charts and you think, well, this is what they did during quantitative easing, and now they're doing more than they did during quantitative easing. It's really you got to wonder, like, what is the limit here, and that's what's hard for me to judge on a month-to-month basis, because I look at what they've done before and now they're doing something new. So it's like every month the rules are changing. It's like they're the referees, but they keep changing the rules of the game every month. So this, I just also want to point out, this has shifted the crash cycles. So before October used to be this horrible time, but look at what they've done now. They've shifted this over, so we don't really see that October crash too much anymore. The crashes really happen, like think about last January. Look at that peak in 2016. The crash happened right after they stopped juicing in 2016. If you look at May, the flash crash, that's in between these juicing periods. All the crashes now happened. Look at last August. That was in between these juicing periods. So now we have to look at this as the primary seasonal pattern of the market now. This is the reality. This is the new seasonal. So if by September the 12th, so this is what we got to look at.
Hey, stay with us. I want you to give us a little preview of what you offer the folks and everything. Give us a few minutes for a break here. 877-927-6648. Shane Smolian, wolftrader.net.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're finishing up here with Shane Smolian of wolftrader.net. Shane, would you tell the folks a little bit how they can reach you and subscribe to your newsletters? I mean, you've added so many wonderful things to them because of the information that you have. Just give us a bird's eye view of what you offer.
Sure. I think the best package for people to start with is the newsletter. And what I've done right now is you're actually going to get 3 different letters now with that. You're going to get the newsletter, which is a basic astro overview. I give, planetary speeds, transits, and then I give key turning dates of the market, or the forecast at least. Lately it's been, the Fed has been just dominating this thing. And then I give cycles where I talk about I give a bunch of different symbols. So, for example, I might give oil, gold, some of the popular ones like Google, Tesla. I'll give solar cycle and a lunar cycle. Solar cycle is the year, lunar cycle is the months. And so I'm adding to that each month. So I might have up to 20 cycles eventually with that. And then I'm going to have a Fed one where we just talk about the Fed and what they're doing, the new cycles. And that's what you would get. It's basically a once a month phenomenon. I send out a couple updates per month, emails, but it's not like a nightly thing. I have a full service, which is Twitter. Now, those are the people that want to keep up to the real-time trades and real-time updates. That's the full service where you get the newsletter plus that. And one thing I want to talk about, too, is we've actually created a trading signal based upon the Fed for the S&P on the 1 day and the 1 week. So now I actually have trading signals that I give up on Twitter in terms of like those patterns.
Shane, let me, we only got about 45 seconds, so could you tell us how they reach you? Give us your email address and the information to reach you, please.
Sure. You can go to www.wolftrader.net, and there should be a pop-up with an email. You can subscribe to, there's a free update list. I update it, maybe once or twice a month. I might give information or updates about information on the market. And then you can email me at Shane, SHANE, @wolftrader.net. And I'll be happy to answer any questions. I do my best to respond to every email. So if you don't get an email, just send it back to me.
Yeah. Thanks for joining us, buddy. We appreciate it.
Thanks, Larry. Appreciate it.
You bet, buddy.
Okay, take care.
Bye-bye.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.